here from North America. Good morning, good afternoon, and good evening. Just listening to the different news that's out there. It is flying around, that's for sure. And the election is the action ACTION thing that's happening. That's where everybody's at. So let's get over to the dollar index right there. Oh, that's oil. Where's dollar index? Where we go. There we go. There. Dollar index trying to lift up. You can see it's been in that daily sell now for about 6 days, and we talk about that each day to start off the webinar. But we're always willing to talk about anything else too. And in this case here, the dollar index on the J4X, let's put it up right there. There it is. You can see same situation. It's been going down. They're trying to bounce a little bit. You can see that there on the J4X. The green line now is starting to turn through the dashed line. That's the two different stochastics battling with each other. So the dollar is trying to do a little dead cat bounce, I guess you could say. That's what it really comes down to, just kind of a little meow meow. The euro was backing off last we looked, and that was there was pressure there. Hey Metho, how you doing? Tried to do the early yesterday, didn't seem to help any. So I'm staying with the later now on. Yeah, and then so the dollar is showing a little bounce here today. Nothing major, but it needed to do that little adjustment, and we're going to see in a little under 5 weeks now. It's like into the 4-week period. We'll see how the election goes, and then we will know, and that'll say a lot about the Federal Reserve and what's going on, because right now markets are in. The UN had come out, I guess it was yesterday or 2 days ago. 2 days ago it came out and said, oh, you got to stop raising these rates. You've got to let things calm down. You need stability. It was that type of talk. And sure enough, the stock market saw that, and they just, the equity markets and the interest rate markets, and they all started to do, positive things, like as if the Fed, as they say here, is going to blink. That's what they're saying. When you kind of look at something and you blink and you're not sure what's going on. And that's pretty much where we're at this point. They think that the market wants to blink. And maybe it does. We'll see. That's what it really comes down to. Maybe it will blink. We know that it's very hard for the Federal Reserve to do anything with the Democrats in charge. And they control all kinds of influential ways to intimidate. I think that's the best way to describe it. And that's why, I guess the markets have been staring at the election for since I think it's like May. They've been telling us about this. Usually it's sell in May and go away, and there's no doubt that it was this year. But they sold into June and then rallied it back up again. And there was an anticipation, and now you can see we've moved back into the lows of June. We're hanging out down in the springtime lows, and it seems like the Fed. There's hope that the Fed is going to blink and just stop what it's doing for a little bit, because we do know that it's mainly policy that has created this inflation. We know it's mainly policy that it's the lack of drilling of oil. We're about 3 million barrels under what we can do. We're supposedly trying to supply Europe with natural gas, but they've stopped the pipelines. In other words, the Democrats are basically doing all these things. Our socialists here in the United States are called Democrats. And so, the chance of a blink does seem to be more realistic. And then you can see it's all the other central banks around the world are starting to do that. And we'll see, November 2nd is the next, thing there. And what Powell could say is that, okay, we're going to see what the elections bring us. This is our last rate cut. We'll wait until, December to decide. And obviously then they can, I think what we're seeing here now, it looks like the Democrats are going to get pushed out. Our socialists are going to lose just like they did in Italy, and the way they lost in Sweden over the last 3 or 4 weeks, and how over in England they're fighting to go Thatcher. They're fighting to go, Ronald Reagan. So I think that's what we're going to see, and I think we've been talking about this, and we've seen the metals market. We've seen gold and silver move up, and so it's been very impressive. We were expecting that because we think that the central bank is going to become free again, instead of being locked into this very detrimental way of floating American currency. They've just been printing and printing and printing, and it's just not been good at all. So this is where we stand. All right, from there, let's jump over to the euro and see what the euro looks like this morning. You see there, just moving down a little bit, nothing major. It's in a buy. It had gotten through the zero line at one point yesterday, but it's backed off again underneath there. And then when we go over to there it is. There's the euro. You can see it on J4X. Same situation. They're trying to curve here. You can see that right there, that little curve. So that's what we're seeing there. Is we see that little curve, and and I don't think there's anything else that can be said about that except for it's at the high end of the range, and it's trying to top out a little bit. I think it's just, like I said, it's just a little dead cat bounce correction as far as I'm concerned. I think that the markets will be even more on hold than before. I think that, let's go over to just a quick look. And when I say the markets, I'm always thinking about the stock market. I'm thinking about what the stock market's doing. So to me, I'm looking at it and I'm thinking, okay, they're off the lows. The S&P 500 is trading at 3,771 with a low of about 3,600. So it's literally 171 points higher. The Dow Jones Industrial Average is doing the same thing. It was in the 28s. It is now trading over 30,000. So I think that's what it really comes down to in the end. All right. Let's jump over to the cable. And there's the cable. You can see the same things going on. Just a little correction going on right there. And over on J4 or on Chicago Quant, right there, you see we're doing just a little down action. Again, this had also pierced the weekly buy yesterday, and just this move right here is putting pressure on it back underneath. But the fact that they're making the attempt is a good thing. That they get over the weekly, and if they close in the weekly buy at the end of the week, what does that really tell us besides longer term money is starting to come into the market? More than likely that they're anticipating a healthier world economy. And the UN had to, the UN rarely ever does anything smart, but when it comes down to this one cry for help in the interest rate sector was pretty impressive. That they actually talked about something that's important to everybody. And that's really what it comes down to at this point, is that markets around the world are waiting to see what the United States is going to be, in literally under 5 weeks. And that will be very, very good stuff, It'll be very, very good stuff. All right, now from there, let's see. Let's go over to the Swiss. Swiss has probably been taking it more on the chin, as I like to say. In other words, it's been feeling the pain more than anybody else. You can see here, it's still up in the 98s. With the action we saw in the euro and the action we saw in the cable or the British pound, you would assume that the Swiss would join in. But this has probably been part of that banking situation. I mean, money is obviously concerned. Investors who parked their money in Switzerland all of a sudden is concerned. They're afraid that it is a Lehman type of moment. And I don't think it is. I think that, I think that they'll straighten out what they need to straighten out. But there's one thing for sure, and that is that the swaps and the size of the swaps are such an enormous thing in an era where swaps are basically dinosaurs at this point. Those swaps were great when volatility was low, back in the 70s and the 60s and the 50s and so forth. But to actually offer swaps as a major public bank or a major public brokerage house makes no sense whatsoever. That's an enormous amount of risk. Can you imagine? Deutsche Bank had, at one point when it basically went out of business and the Federal Republic had to basically prop it up, had $72 trillion worth of swaps. Not $72 billion worth. Not $72 million worth. It had 72 trillion in swaps. I think it got as high as 74. It's down now a little underneath 30 trillion. And that's why they haven't been able to find anybody to merge with it. Same thing with Citibank, who was the major competitor to Deutsche Bank. Same situation. It's owned by the Federal Reserve, and its stock has gone. And both of these companies, their stock has gone nowhere over the last 12 years. Basically, it's moved a couple of percentage points up, nothing major. They're off like the Citibank. Its all-time high is around $667 a share. It's trading now about $40 a share. Deutsche Bank, basically the same situation. It's trading in the $7 or $6 area, and at one time it was a $70 stock. Okay, so they have not budged. It just shows you. And if we had a much more genuine media that would talk about these problems, then we would, pretty much know this for a fact. But they've been trying to create stability. That's what their objective has been all along: create stability, so that people weren't paranoid and terrified and all that other stuff that they can be when they know that their banking system has fallen apart. So that's where we are, and I think that's why we see the Swiss franc, hovering in this area here up towards the highs of the last couple of years. Which is amazing here. I think we can go back on J4X to a monthly when they disconnected the euro from the Swiss. Let's see what we can do here. Let's put a monthly up there on J4X. We're going to make it the whole screen just to give you a flavor of what's been going on. And that's a monthly chart. And you see we haven't been back there in this area since 2019. And then they had that calamity right there. It seems like the resistance area is in that 101, 103 area, that type of thing. That's when that big move here. Can you see that? Yeah, you can. Well, that's when they disconnected the euro from the Swiss. That day, that week, that was wild. I remember that very clearly. And we were in a weekly sell, so I was happy. Let's see, what else? But yeah, so it seems like we're hovering in that area of the 101s, 102s, 100. So they're concerned. They're deeply concerned. That's what's going on here. And that's a weekly chart. So we go back to the daily chart like so. And there's the daily chart. And so that's where we're kind of where we sit, is that they don't know what to do with it at this point. They're worried. You can see we're at the top. They've gone above it a couple times. Hey, Metho, last time the margin calls on the CFD in Europe. Yeah, exactly. That was wild. That was very wild. Matter of fact, there was one of the bankers had come on and, thought things were going to be very passive, and then that happened literally a couple days later. It was like, wow. But that's the way the markets roll. All right, from there we jump over to the Turkish Lira. Let's see what the Turkish Lira is up to. There's the dollar Turkish Lira. Oh, look at that. They've done it again. There's some wild moves there. There must be some major illiquidity problems going on there. Let's see how it looks over on J4X. There we are. You can see it does have some wild ranges. You see the same pressure on it. So, that they're having more and more problems. I guess we don't understand exactly. I mean, I do understand. We don't hear. It's not that we don't understand. We don't hear. The media does its best to hide most information. Like, I have almost no idea what is going on in Canada on any given day. But they're right next to us, and sometimes they come out with some major stuff, and Europe reacts before we react because we don't see it. Our media hides a lot of this information. They really keep us kind of in the dark. Now let's go over and take a look at the Euro Turkish Lira right there, and it's showing you the same wild action that occurred. So there was some illiquidity problems, and I'm sure it's got to be appearing somewhere. I think I'll just go take a look at one of my news feeds that I trust and see if anybody has written about what's going on in the Turkish Lira, and if anybody else from Turkey is on the webinar, please just throw out something. If like Aragon did this, or somebody did that, that type of thing, because I'd love to see what's going on. Also, how are those government puts doing? We haven't heard a word about them. I think they're not paying them. I think that's what it is. Let's see. Revised Q2 GDP surprises with unexpectedly hot personal consumption core PCE. Okay, so that's the U.S. news. It just came out a few minutes ago. Let's see what else. Let's see if we can go from there. Oh no, that's an old one. Forget it. That's not there. White House panics on gasoline prices rebound. Moles export ban. Blast OPEC hostile acts. Biden being Biden, of course. OPEC counterattack. The message is clear. Fed can crash global GDP in their fight against oil, but OPEC wields a much larger stick by cutting production. Rising star trillion energy ready to supply much needed gas to Europe. Good. So the employment thing number wasn't that far off. There was a little jump in jobs by about 8,000. Let's see. I don't see anything on. Here it goes. Dollar, Fed pivots. Nope. I don't see anything talked about on. I don't see anything talking about Turkey whatsoever. European bourses, U.S. futures under pressure amid a firmer U.S. dollar, further debt downside. No. Let's see. No, I don't see anything. So if anybody else out there has seen something about what's going on in Turkey, because we've seen those wild spikes. Yeah, there was the one. UN demands all central banks stop rate hikes and switch to price controls. Price controls, thanks. We don't need that either. Just need them to stop. Nope, I don't see anything. Swiss company offers fortified luxury bunkers. Nope, not a thing. Poland formally demands 1.3 trillion. Nope. Nope, I don't see anything at all. All right, let's jump back over to. Thought we'd just take a quick look and see. So there's the Turkish lira with the euro, and it's been in that daily buy. It's banging against the weekly buy with no problem all week long. And let's see, let's go take a look at it over on JForex again. There it is right there. You see it's way up at the high end of its range, but it's been in the buy on a daily like that. And green. Let's see what it looks like on its weekly on JForex. It's trying to go back into the buy. You can see the green lines through, and finally this week it's pushing into the green there now. Just like us, trying to get into the green. All right, so from there we jump over to the Canadian. Let's see what the Canadian is doing. There's CAD. You can see it's been moving down, and obviously oil's been moving up. So I mean that's normally the game there. Let's put oil over here on Chicago Quant. And there's the oil. It's moving up. And this has been interesting. It's been battling to stay in that buy. It tried to get in there. They changed a little of the data and it straightened out. And the exchange really cleaned it all up. And you can see they've been just pushing and trying to stay into the buy. But the weekly is still having its issues there. But at least it's above the manifold, and the green line is touching the manifold there on the negative side. So, that's a good thing, is it's above the negative manifold. So it's setting the doorway for next week to easily get into a weekly buy if they just stay here at this point. Then what we'll do is we'll put oil on J4X. There it is. Okay. Let's see. There it is right there, CAD. Look at that. So you see right there, and you see the buying going on. I'm a little surprised for the CAD because I thought it was staying down. And, with oil, as you can see right there, oil is up. And so we'll see what they do with the Canadian. I guess maybe it's more of an interest rate factor. That's probably what that is. All right, from there, we jump over to the South African Rand. So we'll take a look at gold, and there's gold. You can see, unfortunately, they pushed it down a little bit, looking good, but it has fallen underneath the weekly. At least silver has not. That's a good thing. And then we put the South African Rand right up here, like there. And you can see the South African Rand trying to work down against the dollar. You see all the pressure there. And gold has been moving up. That's usually the way it works. It works as a good inverse relationship. Okay. So now let's jump over to, let's see, we go there like that. We'll take a look at the South African Rand in reverse. There it is right there. Doing the same thing as the Canadian, doing that little odd bounce. But at least gold is going down, so we know that. That makes sense. You can see, gold going down. Let's put gold up on J4X. Huh. Okay, there we are. And so that's basically the two pairs that we watch that have influences of the underlining, in the case of the South African Rand, we look at it as gold as a big influence. And obviously in Canada is an oil nation, per capita. And it's not only that, it's minerals too. They do have gold and silver there. Very, very minerally strong. And so Canada, at the same time, usually follows the oil market very closely. All right. From there, let's see, what is it? Let's try to get to the yen. You see it's just underneath a little bit, acting a little minus for the last couple of days. I think it's a sell now for 2 days. That's the first day of the sell right there. See. There you go. Right there. So that's a sell. Let's see what it looks like over here. There you are. And you can see it right there, the red. And you can see that the yen is trying to top out a little bit, but when we look at it over here on Chicago Quant, you can tell that they are lost. They don't have any real clarity. But we do know one thing: the Bank of Japan is holding it up in here. They spent about $20 billion over here in those days to hold it firm, and they got plenty of $20 billion they can always draw from. If nothing else, they're probably borrowing from the $1 trillion sitting here in the United States. They can always borrow against it, and the Fed will always lend them the money, I'm sure, to keep stability in the world markets. And so you can see there, we're seeing that little selling pressure, but we're in that weekly buy here. Oh, don't mean to grab that. We're in that weekly buy here, so not much of a reason to. All right. So now, let's see, what's next here? Let's jump over to the Mexican peso, the last. Go south of our border and look at the Mexican peso, and there it is there. You see it's been going down for the last couple of days, and now we're seeing a bounce right there. Let's check it out on J4X. Let's see. Let's see, Mexican peso right there. And you can see the peso, as much as it's been breaking down, it hasn't gone down to the bottom end of its range like it did here in June. That June was an interesting point in time with a lot of the markets. They really smashed things at the June point. It was sell in May, and they sold it down. And then, and the end result is that it bounced. And, we saw this positive action across the whole financial universe. I mean, when you go and look at, the S&P 500 right there, you can see the same thing. They smashed it down in June, and now we finally visited, made new lows, and now they're trying to turn them up. So money's starting to feel a little comfortable, I guess. Same thing with the Tech 100. You can see the same thing happen there, and the Dow Jones Industrial Average. They all went in that June action. Everything, we'll go over to gold. Where's it at? Let's show you gold. There's gold. And they did the same exact thing as they banged it down in, well, no, in this case here, they made even lower lows because they went to the 1800 area, and it, then July, August, they made even more new lows, and then now they made more new lows again. And now they're trying to drive them back up again. So you're seeing it in the metals complex. You see it in the oil complex. You see it in the equity complex. You see all that pressure. All right. From there, that pretty much cleans us up on the currency side of this. If anybody does want to see something in the currencies, just give a shout out. We'll go after it. Now, from there, let's take a look at where do we go from there? We go to... we'll go over to, let's see, what do we do? We'll go to the metals market. I guess we were looking at the metals market. Right there's gold. So there's gold. You can see it's trying to bounce up. We've got that battle going on the weekly. It's very close. Same thing over here on J4X. The metals battle is going on. And you can see it's trying to do a little topping out, and that's probably what's going to go on, is that we're at the top end of a range. We'll probably digest a little bit. Remember, you make money, you take profits, and then you go and get back involved again and do something else with that victory. There's the silver. Silver is really pressing hard on it, but look at the weekly. Very firm, and they are like almost taking out, is that almost a full dollar today? The high is 21.13. The low is 20.24. So it's 89 cents. 11 cents off of a full dollar. Then and the end result is that, let's see, where are we at this point? Let's go to copper. And we know when we look at copper, we think of China. And you can see this little bounce going on here. Some positive action, daily buys. And you can see we are flirting with the weekly buy there. And maybe, China, what was it, for a while there was talk of X, what's his name, Xi, being in jail. I don't know. Now they showed him at a museum about a week ago, and then he's gone again. We don't see him anymore. So there's a lot of interesting things going on in China. There's copper right there. You can see we're starting to pierce the dashed lines. It's trying to digest this nice move off the 330 area, which I think with 326 was the area before. 323? No, 317 back in June. Oh, this is July. Yeah, July. So it missed the June low and generated one in July. Then it tried to make a higher low here, and now it's broken that, and now it's trying to take out this high, and I'm going to imagine that was what everybody's really watching, if it'll take out that high. All right. And then let's go over to platinum. Platinum very firm through the weekly all week long. Let's see where she's at now. Still doing the same thing, holding up well. So as far as we're concerned, we think that there is some real positive action there in the platinum situation. Let's see. From there, why we mentioned platinum is that Dukascopy doesn't trade platinum, but we do watch the platinum contract because the platinum is usually a good leader. It's a little surprising that it didn't get into the weekly buy last week. Normally it does that, so I'm a little suspicious. So I think there's going to be a little bit more digestion and then a takeoff. We'll see. Because we've been looking for this strength now for like 3.5, 4 months to come in this time period, and here it is. All right. Now what we're going to do is we're going to drift over to we are going to find the energy sector. So we'll go to Brent right there. There's Brent. You can see it's in the 90s now. It was down in the low 80s. Now we're in the high 90s. The low 90s now. So it's moved up almost $10. So that's kind of a positive for you longs in oil. And I'm even amazed that anybody. Yeah, if it wasn't for Mr. Biden selling off the military stockpiles here in the United States, the emergency stockpiles, he's sold over half of it. Thank goodness Mr. Trump bought it at 24. They fought him hard, but he won. He tried to buy it at 20 and 15, and they just the socialists didn't want him to do it. But thank goodness he did. He's helped them out in the end. Because he loaded it up historically bigger than ever before. From there, we'll put the oil contract. There is the front month that expires in about 10 days. Is it 10 days? 14 days? 12 days? Something like that. You can see it's still holding up. It had a red and a green there, so it didn't get into the sell that day. And it's bouncing along. And you can see the weekly is trying to turn up. And then when we go into the back month of January, right there, you can see the strength in that. It did get into the sell there and then got back into the buy. And it's in the weekly sell there. So, I mean, it's, basically this has been a very tough trade. The buy you can't take. You try to take the sell, and it beats you up on this. So, giving away profits there. And now it's, it's trying to get back into it closed in the buy yesterday, and it is above. But again, we're in the weekly sell. So, unless you're trading just option derivatives or binaries, it's a very risky trade. All right, from there, let's see. From there, we go over to nat gas. Let's see what the nat gas is doing. There's natural gas here in the States. And we'll take a look at it also on J4X. Right there. Trading at under $7 a cubic foot. You see it's trying to lift here. You can see, let's put that line in there. There we are. Nat gas, let's just save that. There we are. And let's see, what else can we say about that? I guess that's just shows you that the natural gas is moving up. Now, what we have watched is that Spanish company. The only way we can follow anything to try to get a general idea of what's going on electronically for the natural gas in Europe is this Spanish company right here, which has gotten down, it was as high as 30, and as we went into the sell, and as also Nat Gas went into the sell, it fell. And so let's go find that again, and we'll put it up there, right there. And it's in, where's it? No, that's not it. That's the British one. There it is right there. And it's trading at 24. We got it down to about 23.5. It was trading up at 30 euros. Now it's trading at 24 euros. So if a gas company in Europe is going down in price, it's more than likely because prices are going down. You know, they can't pass along the expensive inventory that they bought, that type of thing. And that's usually the way it works too. And so you can see it there. They're trying to, last couple of days, you're starting to see some strength. You see the green line on J4X. It's been, you know, pretty much green since like right here. But now you get a green there, and it's telling you to be, you can be a little long there. That's what it's telling you right there. Let's see what else. Over on the States here, you can see the same thing. You know, they're trying to bounce. We're above the zero line right here. You see that strength there. And that is the action. You can see here, oil is trying to move up now. We're getting more strength in it. We just need to see the weekly get turned. That's what we need to see, is that to get turned, really. And then, let me just, there's the silver. You know, we talked about that. I'm going to save that. You can see it's just hanging over the edge there. Still there, and the weekly is still there. You know, it's battling to, you know, basically, you know, stay there in a sense, or get action out of it. And then, and I guess we should do the gold too and widen it out. There it is right there. And you can see the same thing. So we're looking at all these metals and energies trying to do, they usually work together. It's very rare for them to break away, but they have. They've broken away, and they're not doing what they could be doing. You know, when you think of the inflation and the unrest and the confusion in world markets in general, and we've seen that with the commodities. So that pretty much does the metals. That does the energies. If anybody cares to see anything, just give us a shout. We'll go look at it. And if 47 was around, what we did is we showed you even when we did the 3 hour earlier yesterday, we put the what do you call it, the yen up there, and the Nikkei. Nikkei was showing some strength, just like the rest of the indices. So what we'll do is we'll go take a look at the stock indices now. And let's put that up there, like so. Let's see. I want to put the greens up there because it'll just give you a flavor. Dukascopy does trade soybeans, and there is talk that they're going to trade. They're going to trade some of the other products too at the same time, like corn and wheat. So, I don't think they'll trade cattle. You never know. I mean, look at, there's hogs. I don't know if they're going to go trade hogs. There's December hogs, but you know, some type of action like that. Let's see. Let's go back to stock markets. You can see they are pressing them down to the lows of the day again. This is the S&P 500 right there, down 43. The Dow Jones Industrial Average down 330. We have Bitcoin down 275. And we have the Tech 100 down 150. So they're putting some pressure on the stocks at this point in time. Nothing major, solely because at this point, you know, the Dow Jones Industrial Average has moved up almost 1,600 points. So in the last 2 days. So that's not too bad. I mean, that's showing some life at it, you know, lifting at least. Now let's go over to the daily. And there is the S&P 500. You can see Again, not that much damage coming from 3,600. There's the low there of 35.95, and yesterday's high is 38.08. So that is literally like a 200 point plus move, and today's high was 04.50. So they're holding up. Now the weekly is showing more weakness than we would like to see with that type of action, and I think maybe it'll do that little hesitation, and the next buy with this in a weekly buy could be a very positive move. Now from there we go over to the Tech 100. There's the Tech 100. Same situation. The weekly is having its issues. It cannot get its legs. Here. Let's see. I think. Let's go over to, there's the Tech 100 on J4X. Still looking very firm in here. And the action we're seeing today is just, I think, just some digestion. I mean, we saw a low there of 11,024, and yesterday's high is 11,675. So that's over almost a 650 point move. Is that right? No. Yes. Yeah, it's almost a 600 point move over the last few days, last 3 days. And you can see there it's just hanging around. A little weakness, like I said, I showed it to you right there. You can see the weakness, 154 points as we speak. See a little turn. It went into a nice little sell here. This is an intraday chart. Go like that with it. See the intraday chart. This is a third of a Tesla, is it? No, it's a half a Tesla. So we're looking at a half a Tesla. I have my own labels, so it's a half a Tesla in time. And so you can see here, it's trying to get into the buy right there. We'll see how well it bounces. But look how tight the manifold is, just on an intraday basis. All right, from there, we go over to the Dow Jones Industrial Average, down 321 now. It was 3 something. And this is running on a full Tesla? No, it's a half a Tesla also. And let's take a look at the daily. Right there. There's the daily. And then it's bounced from the low of 28,767 to a high of 30,400 basically. So 28, that's 223, and was that the 14? So it's a 1,600, almost a 1,700 point move over 3 days. That's a pretty good move in the Dow Jones, and it's over the 30,000 point. So we're just watching this action here. It's been in the sell since the 32,000. So we'll see how they treat this. And again, markets are trying to figure out, what are the central banks going to do? I mean, the UN is crying, saying, please help us. Go back to socialism. Central controls. Let's be Soviets. That's what the central bank is saying. The UN is trying to tell us. Let's be Soviets. Must go back to, what do they call it? Central planning. Just like the Soviets. Central planning. Funny UN. The only thing they have right there is it would be nice to see them stop, because we've had central planning going on. That's what it is. It's central planning, right? What's going on now? That's why I say the inflation is artificial. And a lot of it is artificial because it's central planning. In other words, one size fits all. Let's manufacture shoes that only have the size between 5 and 9. So everybody that wears a 10 or 9.5 or 11 or 12, forget about it. Or vice versa. Anybody that wears a 4 or a 3, forget about it. Central planning. And so there we are there. So, and then, let's see. Let's take a look at, we've looked at the 3. Let's look at what we think is sometimes a leader. And that is the Bitcoin itself. Now, we were really concerned. Now, notice that the Bitcoin is through the weekly. and holding there today, even with this little selling that's going on. And Bitcoin slid, and it was literally weeks ago now that the low was 18,000, and it refused to challenge that low. And here we've taken out the highs of that same time period, basically taking out that high of 20,365, going yesterday to 20,545. So we can see here that and it's in a daily buy today from yesterday's action right there. And you can see the weekly is fighting hard to stay in a buy. It's at 174 there. Let's put it up on J4X. Right there. It's trying to lift. You can see that there. And at the same time, let's go back to the intraday. Right there. There's the Bitcoin. We run that on a enormously small 7 contract. It's not 396 like a full Tesla. It's been reduced to its hundreds at this point. I think it's 50 times, so 7 times 350. Yeah, so it's like it's not 100 because that would be 700. So it's we've shrunk it down to that because that's what the math is showing us that's more accurate. You can see it's trying to stay in the buy there on an intraday basis. It is down 370 points, just like the rest of the stock indices are. They're all down, 338 in the Dow and so forth, and 151 and 52 there, and so forth, and 44 on the S&Ps. But when we go back to the daily, it's holding up much better. Maybe it is going to be the leader. It's going to tell us that the strength is coming in, and maybe we're going to see this high challenged here in the 23s, high 22s. So, and it seems like the crypto has been, it has been a really good leader over the last 6 months. When it breaks down, the rest of the market breaks down. When it lifts up, usually the market tries to lift up. You can see we were in a weekly sell, since August, and when we go over to the S&P 500, we went into the weekly sell in September. It jumped ahead much earlier. Same thing with the Dow Jones Industrial Average. Went into a weekly sell in early September instead of, there we are. We're talking mid-August. Literally middle of August, this thing found a way to get into the weekly sell, and it led the action. Now let's go at the same time. The Tech 100 is very interest rate sensitive, and it was the same way. It joined in with the other two stock indices of the Dow 30 and the S&P 500. Oh, and we can do two at the same time. Let's take a look at the Nikkei. And you see there, same thing. The Nikkei did the same thing and then tried to get into the buy here and failed. And, went into the daily buy there and then went right into the sell right there. And then there it is there again. And then that was the sell right there. So put that in there for the Nikkei. And so you can see there the Nikkei, who's backing off identically to the stock indices here in the States, is still trying to hold up in that daily buy there since here, because it was, you can see it was plus there, then it goes minus there, but lifts there. Might be the time lag thing, but you can see that we've been in a weekly sell since that whole action here, and we're getting back to it now. We're only the weekly went into the weeklies in the 27.5, 28 area, and it's now in the high 26s, playing with the low 27. So we're seeing the Nikkei try to rebound and follow the stock indices here in the States, even with their currency, getting beat up like we've seen before. Just getting. Let's put it up on J4X. Actually, in many ways, the Japanese yen against the dollar has been really choppy sideways more than anything else. Where is it at? Right there. You can see it's been pretty much sideways. And when you really look at this whole thing here, it has leveled off since, like 4 weeks back, going sideways, doing wild things, but pretty much the same area. It hasn't really changed much. It's been playing with those 144s, 143s, 145s. The Bank of Japan has basically put its hand in the marketplace and said, hey, this is where we want it to sit. This is where we want it to be. All right. From there, we jump over to, let's see, that's all the stock indices, I guess. Oh, I know it is. We want to take a look at the little runt of the litter, and that is the Russell 2000. Let's see the Russell. There it is. And that went into the weekly sell towards the end of September because it was holding up. I mean, they weren't, money, that's the June low, and they didn't want to put pressure on that at all. It was pretty holding up well. In other words, money likes to buy this when they think they're near a bottom because this is like the really cheap stocks. I don't think anybody in there has more than, if there's anybody in there in the Russell 2000 that's worth over $5 billion, I'd be surprised. I think that most of them are like 2.5 billion and $500 million and $750 million, things like that. They're very small companies. They're successful on some level, and one or two of them could be an Intel or an Apple or a Tesla or something like that. But there's 2,000 of them, so to find that one diamond in the rough is tough. And you can see here we've been in a daily buy, and this is what the Tech 100 used to be at one time. It was a very weak index. They got crushed in 2000, 2001. It was kind of like the very speculative. Now you look at the Tech 100, the NASDAQ, and it's got Microsoft and Intel and Cisco Systems, and these are pillars of our electronic era, the computer age. And it has Nevada, and it has the chip manufacturers of AMD and so forth, and then it has then you drift over and you got Tesla in there, and Google, and Facebook, and Amazon, and it just goes on and on of major companies that are very influential to our economy, literally to our economy. So that's the one I like to always take a peek at just to see what they're up to. And you can see they tried to go after the lows here of June, and that low there in June was 1649, and you can see the low here was 1653. That was 1657. That was 1656. Didn't take out the low. 1661. So that low survived, and it's trying to lift up now. We'll see what they do there, and this thing can get back into a weekly buy. That will be a good sign that we're seeing some strength. Oh, what are you laughing at there, Metho? Is that the description of the Nasdaq compared to the Russell, and how at one time the Nasdaq was, or the Tech 100 was the Russell of today? Because it is true. It's funny to see. It is. I agree. All right, I think we've gone through everything here. We've given you a good flavor of it all. Let me just close with the interest rates, because just as the yuan cried, you can see for days now it's been trying to bottom in here and hold up, but it's still in that long weekly sell right there. And that's the 30-year, and the 10-year, kind of the same situation. It's been in the daily buy from here, but it hasn't really done much. But it's in that long sell since mid-August, just like Bitcoin in many ways. Russell is a zombie club. Yes, it is. Yeah. What it is it's the pink sheets in a sense. In other words, they're little companies, but Apple was a little company. Nasdaq, Intel was a little company. Microsoft, they all traded it at the same prices at one time, the same multiples as the ones in the Russell today. So it's just another avenue of opportunity. But the problem is it's not the easiest one, but it's, everybody rushes in and buys this, and, they buy the 2000. It's the speculative one. Yeah, that's what it really comes down to. You're right. There's a lot of zombies in there. But I can tell you, more than likely, there is also an Apple or a Intel. And I'm sure that, we go back, doing the webinar 5 years from now or 10 years from now, and you look at the Russell, you'll go, wow, look at this company. It was in the Russell 2000. It was trading at 10 cents a share. When I looked at it, and Doc talked about it, it was trading at $3 a share, and now it's trading at $300 a share. Now, the other 1,999, they may be bankrupt at that point. Who knows? And replaced with other things, But, yeah, I mean, that's the problem is that you can't buy all 2,000 and hope to catch that win because all the rest of them will cost you a lot of money. But you have to be able to lay off that risk. I mean, that's what the derivative market's all about, is trying to cut down on the risk. So, all right, this is Doc from North America. We will catch you all tomorrow, same time, same channel. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, be safe, be smart.